Welcome to Digital bananaZ, where we break down all things crypto in this crazy space. In this video, we're going to cover what is Bitcoin, why is it so popular, and should you invest in it? I say no. Stick around and I'll explain why. Let's get into it. Bitcoin is a peer-to-peer digital currency that was first introduced in 2009 by a mysterious developer named Satoshi Nakamoto. According to him, Bitcoin functions as a decentralized digital currency that can be used for online transactions. Even though not many people gave Bitcoin any thought when it initially launched, it has developed into a worldwide phenomenon and is the forerunner of a trillion-dollar cryptocurrency market. However, just like with any new technology, many individuals are still unaware of how Bitcoin operates. It's also likely that if you're watching this video right now, you want to know how Bitcoin works, and maybe even if it's a wise investment. So what is Bitcoin? Bitcoin is a decentralized digital currency, which means it's not governed by the government or a central organization like the central bank. Its purpose is to function as a medium of exchange and money between two people without the need for an intermediary like a bank. Bitcoin may be sent between any two persons anywhere in the world, without the need for a bank account or permission from a central authority. Blockchain is the technology upon which Bitcoin is based. For the sake of transparency, all Bitcoin transactions are kept on a form of a public ledger called the blockchain. Every transaction is completed safely utilizing a decades-old method called cryptography, which is kept in a database called blocks. The blockchain is created by connecting these data blocks together. You need a Bitcoin wallet in order to send and receive Bitcoin. Your wallet, on the other hand, has what is known as a public key and private key instead of actual money, unlike your bank account. Your private key is like your password, which you have to keep hidden, while your public key is like your email address, which you can share with others. Every transaction you make is encrypted and posted to the blockchain, where miners, those who verify transactions, are required to approve them. Miners use sophisticated algorithms that authenticate transactions with powerful computers that have the ability to solve hash equations, which are just intricate mathematical calculations. Whew, that was a lot. Okay, enough with the boring technical details. Let's get to the exciting stuff. When Bitcoin first appeared on the scene in 2009, only a select few programmers and researchers used it. In fact, the value was essentially zero, and one of the earlier adopters used 10,000 BTC to purchase 2 pizzas just to see if anyone would accept Bitcoin as a form of payment for an actual product. Based on the current value of Bitcoin, those 2 pizzas today would cost over $400 million. Ouch! However, as more people became more aware of Bitcoin's potential, both its user base and price began to grow over time. A possible contributing factor to Bitcoin's rise in popularity is due to decentralization. In contrast with traditional banks, Bitcoin is not governed by a single entity or collection of entities. It's based on open-source software, which cannot be modified or changed without the approval of all of its users. Peer-to-peer transactions are a significant factor that has added to Bitcoin's appeal. Users can send Bitcoin from anywhere in the globe to anyone else, and the recipient will receive it right away because there's no central financial authority to approve transactions. For those who had to wait several days before they could send money overseas, this was a game changer. Again, sending and receiving Bitcoin anonymously is feasible because of the absence of a central authority. It's permissionless. All transactions are registered on the blockchain. However, they are all encrypted and connected to an anonymous Bitcoin address rather than a recognizable name. In addition to the immense popularity, there's a limited supply of Bitcoin. There are 21 million Bitcoins in total supply. There won't be any more Bitcoin created after this quantity has been mined. Since there is a limited supply, Bitcoin has gained value over time and viewed by many as a rare commodity. As of today, more than 19 million Bitcoins have been mined. This raises the question, can I still purchase Bitcoin? Well, let's find out. The answer is, yes you can. Although the price of Bitcoin has experienced many ups and downs over the years, government restrictions and no regulations have had an impact on its price. Investing in Bitcoin can result in volatile increases or decreases in its value. Although Bitcoin ETFs were recently approved by the SEC, this gives small investors an opportunity to invest in Bitcoin through an institution in a more traditional way of doing things. The best time to invest in Bitcoin will rely on your own trading goals and risk tolerance. Also, keep in mind that you should only take on risk with money you can afford to lose, and this is not financial advice. So you're probably wondering, with all these positive and negative reasons to buy Bitcoin, why I said no to investing in it at the beginning of this video. Well, it's simply because the average person does not have the money to invest in a full Bitcoin, which in today's price, it's around $43,000. If you're looking to profit from this asset, you can, but you won't become a Bitcoin millionaire if you don't have the funds to invest in bigger amounts. There are plenty of smaller cap coins that we'll share on this channel, so hit that like button and stay tuned to learn where you can get the most bang for your buck. The broader public is becoming more aware of the potential of Bitcoin as a valuable store of value. Given the current state of the stock market and rising interest rates, more investors might be considering alternative investment opportunities like cryptocurrency. Since supply and demand have the biggest effects on the price of Bitcoin, a positive price shift is probably in store for the upcoming months. In other words, your chances of profiting from price hikes increases the earlier you invest. One of the initial difficulties with cryptocurrency was the high cost of transaction fees. Over time, Bitcoin transactions have gotten cheaper, which has drawn in more potential investors. Sending and receiving Bitcoin is more challenging for users with higher transaction fees. Recall the basic principle of supply and demand. More investors would be encouraged to invest more because of low transaction fees. The ability to turn assets into cash quickly and affordably is referred to as liquidity. Bitcoin is more liquid than the majority of other cryptocurrencies available and trades around the world 24/7. Furthermore, an increasing number of establishments and merchants are embracing Bitcoin as a payment option, making it highly accessible and adaptable. Having said all of this, Bitcoin has the potential to appreciate in value, as we have observed in past years. In 2009, it began as a decentralized peer-to-peer digital currency amongst a select group of people. Nonetheless, Bitcoin has developed into the most well-known cryptocurrency available. It's the Mac Daddy of all crypto, with an estimated market cap exceeding $800 billion at the time of this recording. It has the potential to appreciate in value even though it's unstable due to the lack of regulations, which are currently in the works. So where can you buy Bitcoin? Using a trustworthy cryptocurrency exchange is the quickest and most straightforward way to purchase Bitcoin. You can send and receive cryptocurrency instantly using many of the leading cryptocurrency exchanges available. Coinbase, Crypto.com, Uphold, KuCoin, and Bitrue, to name a few, are known listed exchanges. Once you purchase Bitcoin from an exchange, it's highly recommended to store it in a secure location like a digital wallet. You should transfer your cryptocurrency into a secure digital wallet that has your private keys because crypto exchanges unfortunately have been targeted by hackers. There are other ways to purchase on non-exchanges such as Cash App and PayPal, but these are centralized, meaning they are governed by the banks, which defeats the purpose of buying and owning crypto decentralized. If this video was helpful, subscribe for more information, easy breakdowns, and up-to-date crypto news. Thanks for watching.